Hey, what's going on, guys? Welcome to the Hustle or Stay Basic channel, the Invest or Stay Basic segment. I'm your host, KG, and today I am going to talk to you about my favorite stock that I absolutely love holding and will hold forever. And of course, you can see I got some crazy long hair and a crazy long beard, but we got to deal with this during the pandemic. So let's get into it. So the stock I'm talking about today is a great Canadian brand. It's a small cap, 455 million market cap. And for those who don't know the different caps, small cap is between 300 million and 2 billion market cap. So it's definitely a small cap. It's down over 15% in the last 12 months, has some great dividends, and it's a royalties income fund. If you're not familiar with what that is, don't worry, I'm going to explain that to you. So the company I'm here talking about today is A&W Revenue Royalties Income Fund. And essentially what it does is it owns the royalties for the A&W trademark. Pretty confusing, don't worry, we're gonna get a little bit more into it, but if you guys aren't familiar with what A&W is, it's a Canadian food chain. They serve, burgers, fries, and drinks. And here is a map showing all the locations across Canada. Some key things to note is that they have, almost 1,000 restaurants all across Canada, and they've done, $1.4 billion of sales in the last 12 months. So, the first thing you're thinking about is probably like, hey, this whole company is doing $1.4 billion in sales, and you're telling me the market cap is 455 million? That sounds like an absolute deal. Sorry, but you're not buying all these restaurants, you're buying the royalties. So let me get into that. So a royalty revenue income fund is a top line fund. And when you hear top line, for all you new investors, top line is sales and revenue, and bottom line is earnings/net income. So this is a top line fund. When you buy the stock, you aren't buying all the A&W restaurants, you're buying the royalties, as I mentioned before. And how much in royalties? So this fund takes 3% of all A&W sales and distributes a portion of it to the shareholders. The great thing about this that I absolutely love is the distributions are monthly, and I'll get into that a little bit later as well. So I got this little graphic here that shows all the sales of A&W over the past 20 years, and as you can see, they were doing about 777 million in 2010, and they've doubled that in 10 years, and I think they're going to continue growing. So what's 3% of $1.4 billion? Well, it's about $44 million. So A&W has increased its sales by 30% over the last 4 years. So the royalties themselves have increased by 30% over the last 4 years. One question you might be asking is, if A&W is skimming 3% of royalties, what incentive do these restaurant owners have? Well, number one, a restaurant owner wants their sales to go up. So, that's number one incentive. The second incentive is 26% of all shares are owned by the restaurants. So they have an increased incentive to get their royalty back as distributions. You can see here that the coronavirus has brought some pain on the restaurants in Q1, Q2, and Q3, but you can also see there's a slight recovery in Q3, and I think we'll be back in Q4 2019 numbers somewhere around end of 2021 or early 2022. I also want you to note that although this gap looks massive, it's only $4 million. So now to the most important question, why do I love this stock so much? And lucky for you guys, I've listed out 5 reasons on why I truly love holding this stock. Number one, I use the product. If you're familiar with Peter Lynch, the great investor, he's always said, invest in what you know and understand. And I use A&W products. I have one by my house. I go there, grab a burger. I love their food. It's great. This is also a great time for you, the viewer, to reflect and look at your portfolio and try to ask yourself, do I use any of these companies' products? Do I really understand the business? Anyways, that's number one on why I love this stock. Number two, they actually listen to their customers and they adapt. They were known, I would say, in the early 2000s to kind of stay stagnant and not do anything, just kind of have the same products. But I would say over the last 5 or 6 years, they've made some Huge changes. Number one, they were one of the first restaurant chains here in Canada to offer a meat alternative product with their Beyond Meat burger, which is hugely successful. And I say that by having some experience. Whenever I've gone into an A&W drive-thru, you can always see the order of the person ahead of you or what they just ordered, and I always see a Beyond Meat burger, so I know they're popular for sure. They also serve grass-fed organic beef in their burgers, and I can totally taste the difference. Every time I have a burger from A&W or like a meal, I don't feel like crap. And I really like that feeling of just having fast food, but not really feeling all lethargic and crappy about it after. All of their products are 100% compostable. I think that's a really cool initiative that they're doing. I don't think any other restaurant chain in Canada does this today. And then also, they're quick plug. I swear this video is not sponsored by A&W, by the way. But they could sponsor it if they wanted to. But they're giving free coffee all of January. So, stop by A&W, get a free coffee. I think they've partnered with Van Hoot, the guy with the mustache and the glasses. It's pretty good coffee. I've had it. It's pretty good. Okay, let's go on to the third reason. Now this, you're watching an investing video. You're hearing me talk about the products, but this is probably why you're mainly here. And it's the monthly royalty distributions. Who doesn't love getting paid royalty distributions? It's pretty cool. So they were giving about 16 cents per share in royalty distributions a month prior to the pandemic. After the pandemic, they adjusted and they brought it down to 10 cents just to be safe. But I think they can return to that 16 cent mark sometime in 2021 pretty easily. I think this is super cool because a lot of people have DM'd me on Instagram, by the way, at KG the Hustler on Instagram, and asked me, how do I make passive income? This is definitely one method. If you have your tax-free savings account and you had 1,000 shares, you'd be getting $159 a month in your account just for being a shareholder of this income fund. Pretty damn cool. Okay, and the fourth reason is the long-term yield. And what I mean by that is the actual dividend yield. So right now they have a dividend yield of 3.7%. So, with those monthly distributions, I'm making 3.7% on my money. Like I said, this isn't a stock that's going to make you 3x your initial investment, but I really like it. I personally own the stock at $28.80 per share. So I'm getting a 4.2% return annually. If the dividend returns to 16 cents a month like it was, I'll be getting a 6.6% return annually. And personally, I think it can grow to 20 cents a month pretty easily over the next 5 years, if not more than 20 cents a month. And that would give me an 8.3% return annually, which is pretty sweet. I know the fad right now is to get like 20% returns a month and 100% returns over the year. I think that's totally cool if it's a low risk move. This stock alone is, personally, in my opinion, super low risk. And I think the dividend yield is just going to continue to grow. And 10, 15 years from now, I'll be getting some really good yields. So if you were to buy the stock today and you get that 3.7% yield on the year, might get that question why don't you invest in higher yielding stocks? Well, personally, I am not, because I believe in this company. I believe in their future long-term growth and the growth of the yield. There's some crazy companies out there giving some really high yields, but they're really not very sustainable. So I'll just choose to hold on to my A&W stock. So the fifth reason why I love this stock is, I talked about the yield, but what about the capital appreciation? What about the stock share price increasing? And today, like I said, it's at $32 a share. Pre-COVID, it was at around $38, $39 a share. I can totally see it get back to 39 and even surpass that over the next couple of years. The reason I say that is because they add about 33 restaurants a year to this royalty pool. So if we're adding 33 restaurants every year, what do you think is going to happen to the royalties? They're going to go up. The sales, they're going to go up. So what's going to happen to the value of the stock? It's going to go up. Personally, I think in 5 years, this stock being $45 to $50 a share is not far-fetched. I would put it at like a $600 million market cap. That is not far-fetched at all. And I think if you held on, your yield might even be somewhere around 8 to 10%. To summarize, I really love this stock because I can foresee myself, 10 years down the road getting 15% yield annually just on the distributions and of course the share price appreciating significantly over the next 5-10 years. It's just a stock I bought. I'm going to hold on forever because I really believe in the brand and what they do. Do you guys like A&W? Let me know in the comments below. Now, if you guys don't like A&W at all, I got a couple different alternative suggestions for you if you want those monthly distributions. We have Boston Pizza, the Keg Royalties Income Fund, SIR Royalty Income Fund. This kind of has like Jack Astor's, the Loose Moose, Scatterbush restaurants. Some of these have been beat up quite a bit, especially these three because they're in the dine-in sector of the restaurant industry. And these all three could be great plays on recovery. So if you guys enjoyed this video, please drop a like, subscribe, drop a comment. I got a lot of comments from you guys on some videos that you want me to do. Don't worry, they're coming out this week. I'm going to pump up some videos for you guys. Hope you guys enjoyed it, and I'll see you guys next time. See ya.